Okay. Well. This is Nasdaq. Nasdaq. 15-minute chart. Where do we start? Okay, so the vertical lines, time, and the other one price. Okay, beginning of the week. This is the first candle of the week from the 15-minute chart. Okay. During the Asian session, because we open at 6 Sunday, we trade down to the specific 1 hour favorable gap, and then we trade higher. During the London session, and this favorable gap acts as an inversion favorable gap, and also it is the high of the weekly favorable gap. So the weekly favorable gap high. Okay, so from consequent conclusion and using the high to pump the market to go where higher to where at the previous week work, the consequent encroachment of the previous week work. And then immediately here we are at premium. We have this specific premium favorable gap, the red lines at the favorable gaps. Okay, let me go to 1 hour chart and no, this. Okay, let me remove this. This is 10 o'clock of yesterday where there was news. 10 a.m. there was news. This economic calendar had NFP. It has been altered. This is the first week of the month, NFP Friday. But now the market makers have altered the calendar because Monday I saw NFP at 8:30 now it's normal showing. But it's okay. On Tuesday there was no event at all here. There is no event, literally zero event yesterday. But the market is able to drop from, and precisely looking at a 1 hour chart at 8, the 8th 1 hour candle, and it drops and covers all this distance without any news, zero news. Okay, that is fair. Okay. Okay, let's go to higher time frame. Higher time frame, weekly chart. Weekly chart. What are the most key levels that are in play? We have this favorable gap. The market has gone through past it and taken sell side here, and then we went traded above it. While the wicks here until this point, they were just doing the damage while the bodies were above. This body is above, this body is above, this body is above, this body is above, this body is above. This is now February, the beginning of a new month. This week is the one that's currently forming. It has not completed. It still can trade higher or lower. Now it has reacted on the week, previous week work, consequent encroachment. This is the CE, consequent encroachment. Okay. Well, from then it is traded to the weekly fair value gap, consequent encroachment. This is a buy side imbalance, inside inefficiency. Okay, it's been trading here. This is from the weekly perspective. And then when I go to the daily chart, looking at the first 60 days, 20, 20 days, 40 days, and 60 days. So This is the 40-day high, around 40 days. This is literally the last 20 days, the lowest low in the last 10 days, the lowest low in the last 40 days, and the lowest low in the last 60 days. And you can see again, I have said this before. So basically here, with my assumptions after taking out this outside liquidity, I had an assumption that okay, the best case scenario is that this market will run until it reaches this October high, and when it reaches this October high, it can start dropping. But of course, we have like professional markets. Okay, like when we go to like ES, these are futures, of which when it comes to futures, everyone has the same price. It's not the same as Nasdaq, where on Nasdaq we can have different prices. So here you can see that ES, ES, E-mini Nasdaq, it has made a higher high. This is the October high, and this is the January high. It has made a higher high, made a high high, and we have this big opening range gap, and we traded above it, and now we are trading below it. A gun to my head, this market is trading here. This is the drawn liquidity. Also with Nasdaq is the same thing. I'm looking at low prices and see if it can reach this. Yeah, from now this day as we speak, like this is where I think the market is likely to draw to. Previous week, is this a previous day high taken, and then previous day low should be taken. So the next candle should gravitate towards this. Otherwise, if the market closes above um, this, we can assume that it will take out the high. But right now, there's a cracking correlation between ES and NQ, and I want to see the market use this fill gap to push price lower. Let's see NQ. Okay. NQ. So this is the March contract. Okay. You see with NQ, it's the same high. Here's the same high. This is a higher high than this. So this is SMT. SMT. So my draw on liquidity is this. I want to see the market come trade below here. Trade below here. This is the draw on liquidity. Draw on liquidity. Draw on liquidity. The next one is this one. Kind of when do you roll over to the next contract? Okay, from Nasdaq perspective, okay, I'm looking for the market to get to draw here, like go down, down. Okay, something like this. You see, okay, maybe this will be like a daily bullish order block. So like a higher time frame perspective. Also, but I'll be doing exactly the same thing on Nasdaq CFDs. mm, this is the daily order block. So this is the bearish order block. Bearish order block. So it's supposed to be minus daily bearish order block. I can maybe increase the size. I want to see the market use the order block to push lower. Okay, something like this. Okay, so this is like an analysis from. Okay, it is delayed data, of course. 10 minutes. How much? How many? Yeah, 10 minutes delayed data because I'm not paying for this. Um, okay, but I can go to Nasdaq 100. So this is a CFD, and I'm looking exactly for the same thing. I want to see the market go lower. I want to see the market go lower, and since I've been analyzing this one, it's reacting on the premium fair value gap. The current dealing range is this and this. As long as this high has not been taken and this low has not been taken, this has always been the dealing range. The market, when it's attempting to go higher, failing, it will fail at premium. I can automatically see that here, this fair value gap, it's at premium. So next, I'm anticipating the market should what? Go lower, go lower. Okay, whatever. Go lower, continue, go lower. And we can also take out December low. We'll see what does the market do when it gets here. Okay. And then on our 1 hour chart, 1 hour chart, looking at from this day, this is a whole week, red to red. This is week one. This is week two. I'll just focus on like 3 weeks. Okay. Okay, 3 weeks of analysis. So this is week one, this is week two, and this is the current week that's happening. So the market opening Sunday went down where to this fair value gap. Then after trading to this fair value gap, what did it do? Boom, it shoot higher. So the market for the past, it has been trading under the same range since this week. It went higher for the whole week, went lower the whole week, continued lower the whole week, and then not even the whole week, reversed on Wednesday. You see, okay. So the market isn't playing around the consolidation. So now we are on February, and this is the first week of February. Um, we had Monday and Tuesday, and the first week should be a non-farm payroll week. So we had seen this nice reversal here, and also this, it is the high of some previous week. So 2 weeks ago, so this high, this is a previous week high. This the market took out liquidity here above this. This is a previous week high between red and red. This is the highest one high for that week. Okay, but we can clean up the chart because it's also like the consequent encroachment of the weekly fair value gap. So we see what the market has done here. It has traded higher and then created its favorite and then went higher and then traded to this, which we have this fair value gap. So from here, from this, the consequent encroachment of the daily wick, we see this low. Okay, I see this low. I see this low. It's broken with a clear displacement, with a fair value gap, clear displacement. And the market, what does it do? It comes back here and distributes to this level. For distributing to this level, it goes back to the premium level. Also, still this is involved and distribute lower. So we can go to these are days. These are time cycles of days. Time cycles of days every day. Okay. This case scenario was that this market trades even below here. But this, it can be relative equal lows. This is relative equal lows being left here. And we had this fair value gap was we created, but we use this fair value gap to go lower. We'll see what the market does here. Okay, I just want to clean up. There's too many fair value gaps, and even this one, I'm gonna clean it up. And I wanna work with only the recent one. Even the drawn liquidity, it helped me. It was the best drawn liquidity for Monday and Tuesday for both buyers and sellers. Okay, now from this point, I'm on Monday. These lows, these are relatively equal lows. and then I have this. Okay. Um, as we speak right now, we are currently like bullish because we are. This is a higher time frame PDRA, and we are reacting on it. So at this, oh no, this is not the right time to trade. I know. This is not the right time, but I am analyzing. We'll check tomorrow how it. I'll reanalyze and check. Let's wait for 6 o'clock would be the start of Asia. So right now the market will consolidate. And then we'll open again at 6. Okay. This looks like a beautiful market maker buy model where this is a smart money reversal. And why can this be a smart money reversal? This high and this high. This from this time 2:30 to this time 7. This is a whole session, and this session is relative. The high of the session and the high of the session are relatively equal to each other. So between this time and this time, we have this high. Between this time and this time, we have this high. And these highs, the highs of the sessions, they're relatively equal to each other. So if this level, if then statement, I want to see this level act as a as take us higher. I want us to I want this to stand. If this fails, then we're going to be bearish and continuing lower, and we'll trade to the December low. That will be that will be the target. Or we can just use this as a retracement. We'll see what happens to Asia, what Asia sets up, because if we consolidate during Asia, we can use any of this favorite gap to trade lower to the December low. Okay, but this looks too thin. So the first I come to my head, I'll first look for bullishness to come and clean up this relative equal highs. Okay, this is how the chart looks like. So this was a market maker, beautiful market maker buy model. Market maker buy model, boom. Then the market just consolidate, and then also another market maker sell model, boom. Beautiful. Okay, so daily chart, daily chart, daily chart. We'll see if this could act as a bullish order block. This will be the best case scenario. Wanna see this green candles acting as this is order block. Wanna see this act as an order block, and wanna see this up here on the okay. And I can change the color so that it's become unique. Yeah, no. Let's give it like a green. Okay. Or let's give it yellow. It's fine. Yellow. Okay. And I wanna see if this on. Oh, let me see. Yeah. Okay, we have this down close candle. This is the opening price. This is the opening price. We have traded above this, and we use this as a high time. This all premium arrays have been used. When I see this market get here now, this is where we're targeting now. This is the draw on liquidity. Draw. Okay. Draw. D, 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 d. Yeah. Okay. Then on 1 hour we can see. Alright, okay. We'll see what it does. Okay, this is the level on the 1 hour. And this favorite gap, it is important. Something like this maybe.